2 things to look for before investing. It's not everyone's cup of tea to try their hand at entrepreneurship because of its challenges. After taking honest stock of your character and aspirations, you discover that you are prepared to launch your business. Today's video will look at some important points before investing. What is investing? Before we start, first we need to give everyone an idea of what an investment is. Investment is the deliberate use of a resource with the expectation that its value will rise over time. Putting money into anything means giving something up right now, whether it's time, money, or effort. The point of any financial investment should be to produce some profit. A plan to guide your investments, including when and how you hope to reach your goals, is one of the most important things to do before putting your money down. Determine how much time and risk you can afford to invest in achieving your financial objectives. What is Gary Vaynerchuk's financial advice? Gary Vaynerchuk said he spends little time looking backward when asked about his past. Throughout his life, the serial entrepreneur and investor has inspired many people worldwide, propelling them to strive for excellence, build something of worth, and improve their circumstances and outlook on life. When Vaynerchuk, who is worth an estimated $160 million, lives by this philosophy, every day in his roles as CEO and co-founder of global digital marketing agency VaynerMedia, 4-time New York Times bestselling author, daily vlog host, and partner of venture capital fund VaynerRSE, he also has an eye for great ideas. In addition to being an early backer of Twitter, Tumblr, Uber, and Snap, his VaynerRSE portfolio currently includes around 80 other businesses, such as the cryptocurrency exchange and wallet Coinbase, and the monthly beauty box service Birchbox. Number 1. Maintain a sensible financial outlook. The significance of being realistic about finances is the first and foremost piece of advice he provides to aspiring business owners. What amazes him is the number of would-be business owners who don't know the value of revenue generation or how to handle earnings when they first open for business. They're preoccupied with how much money they'll make in 4 years rather than meeting immediate financial obligations and establishing a sustainable business. That's just so impractical, it's not even funny. Money is essential to survival. In other words, how long can you keep going without any more income? Do you have enough money to cover rent and utilities for a year? It is his first worry for first-time business owners since it's the biggest error they make. Before you can start making money, you must ensure your actions can deal with the inevitable loss of capital. In his experience, there are 2 common initial blunders made by new business owners. They haven't gotten any money for the company and haven't sought out any venture capital. They barely have enough capital to last them for the next 6 months to achieve their business objective. While on day 1 of entrepreneurship, they imagine every possible outcome that will lead to success. By day 3, they realize that nothing has gone as planned and they are out of money. Their abundance of capital prevents them from bulking up and becoming a formidable source of income. They have been accustomed to the notion that a burn rate loss of $150,000 is acceptable because their company is well funded. Instead of concentrating on creating a sustainable business, they are preoccupied with securing funding for their next round. Starting a business is generally expensive, especially if you need to put up money up front in addition to your time. You should know how much money you'll need to cover basic costs like rent, materials, and inventory. High levels of realism are required for success. If you're enjoying this video, please hit the like button and subscribe to our channel if you haven't yet to show your support. Now let's continue. Number 2. Understanding the time commitment required to build a business is crucial. As the second advice, Vayner always tells new business owners that the first year is dedicated entirely to getting the business off the ground and not watching Game of Thrones in one sitting. In the future, you will not be permitted to view the #AskGaryV show. That means you can't hang out with your pals in the wee hours anymore. If you want this business to succeed, you must devote every waking minute of the next 18 hours to it. Even time spent with loved ones counts. You must be willing to make a serious sacrifice and understand the seriousness of the commitment needed. You must make that mental shift if you're serious about starting a company. Then you can consider your free time for family and recreation a bonus. In reality, you should consider how large an enterprise you hope to create. The longer you need to add on to year 1 of a business, the larger it is. No matter what may arise, you must fulfill your promise. The reputation of your company and yourself are on the line. Your reputation as an entrepreneur is at stake if you make poor business judgments. Various authors have reported that the first 18 months of a company's existence are the most crucial. Most firms fail early on because their founders don't have the requisite drive, passion, and skill to be great entrepreneurs. It's not necessary if you follow these suggestions. Your business will be successful in its first year, but without them, you're not giving yourself a fighting chance. Well, that's all for today's video. Tell us in the comments section how this one was. I hope that you found this video interesting. If you want to see more videos like this, please consider subscribing for more. And don't forget to give comments and provide us with your valuable feedback. We'll see you in the next video with some more interesting facts and stories. And until then, stay tuned.